What's going on, YouTube? Chris here. Want to bring you all an update today of Bitcoin. Right now we're sitting at 8,844, and this is the area that we've been looking at and talking about that we must defend. And this is coinciding or lining up with that 200-day moving average. And in my opinion, we don't want to start dropping back below that 200-day moving average. The bulls fought to get up above it. We've traded up above it for quite a while now. If we start dropping back below that, that could be a bad sign for us, guys. So this is kind of the area. Today is the area where we need to defend the 200-day moving average, in my opinion. And as we step back and look at this, I wanted to show you just the big picture of what's taking place here. And what you can see is, if this is the area where we topped out here, we're basically forming a massive symmetrical triangle here. So we have our lower highs, so that would be a lower high that was put in. And then what we're also having are these higher lows, so we're getting into this squeezing effect. And typically, if you read about symmetrical triangles, they can break either way. They're more of a neutral pattern, but a lot of the times they will want to break with the trend. And overall, as we look at this here, the trend still has been up. So we're looking to see if maybe we bounce around in here a little bit more before we potentially could make a strong move to the upside in the weeks to come. We're going to have to see if that takes place. And a lot of people, they're underestimating the power of the halving. It doesn't happen all the time. And I don't believe we have seen the full run up to the halving yet. That's just my opinion. I believe that it could take us well up to test that $14,000 if we really start to pick up steam towards that halving. Now, once we get to the halving, that's a little bit different story. A lot of times it's buy the rumor, sell the news. It's something that you have to look out for. But building up into that, we still have a couple months building up into that. And I want to see what takes place during that time. And another thing I wanted to point out to you, as we are dropping down below that 50-day moving average, just like here in this uptrend that we are in, a lot of the times we came back and we even tested this 200-day moving average, and then we kept moving. We dropped down through plenty of times this 50 moving average before moving higher. And as we were looking here, we were paying attention to the retracements. And a lot of the times the retracements were over 40% to the downside before we started ripping to the upside again. So that's definitely something that you got to pay attention to, is the fact that when Bitcoin rips really hard, it has to take a huge deep breath. And right now we're about at that point to where we should start seeing some type of reversal here. So if we're looking at this move that we've been dealing with here, you can see right now there's a big fight over this 200-day moving average. Right here, you can see the wick. The bulls defended it. We came down to about $8,500, and then we got bought back up a little bit. And right now we're just in that fight back and forth. Now, what I didn't like to see, just to give you an example here, what I didn't like was this was our previous resistance. We broke up through it on a nice strong candle here. We were moving. That should have been support for us, and that would have been around $9,500. But what happened was we started to break down through that even more, and we end up hitting, right now we're at our 0.5 Fibonacci level. So if we go from our swing low here all the way up to our swing high, this is still in the common retracement for Bitcoin. A lot of the times you see that 0.618, and that would even take us down to around 7,883. But for me, I want to see, because we have this confluence of this 0.5 at 8,480 as well as this 200-day moving average, I'm looking to see if we will get some type of a bounce off this area. We need to defend that 200, in my opinion. We have been trading up above it since January 27th, 2020. So for a full month we've traded up above it. So to give that up, that would show weakness, in my opinion. And that's just my opinion, guys. And also, if I'm coughing and sneezing, I apologize. I've been dealing with just a wicked nasty cold here, so that's why I wasn't on with you yesterday. I just really couldn't talk, but I'm going to do the best that I can for you today, just really trying to look at these areas where we potentially could get a bounce. Okay, so as we're looking at that, this area right now is where we're going to need to be getting a bounce off of. So if we go into our indicators now, I want to take a look at our stock RSI. Stock RSI, we're at 1.45 and 4, so we're extremely oversold in that area. So that's another reason why we may get some type of a bounce, even if it's just a short little bounce, up into these areas. Start testing $9,000 again, see if we can turn that into support. That would be important for us. It's just all about that slow grind. You have to break the first resistance and then turn it into support. That's what's so important here. So we're oversold there. Next one we're going to look at is our RSI. RSI, we're at 39. We're dropping below that critical 40 area. A lot of times you want to watch that 40. Pay attention to that for the RSI, but we have cooled down a ton here. And we're at an area now, if we did get some type of a bounce here, we have plenty of room to run to the upside. As you see, we get very overextended in Bitcoin. We can get well up into the 70s and 80s. So if we were to get a bounce off this now, we'd be looking, for a nice little run up because we have plenty of room on the RSI. And what we're going to need today, say we did close where we're at today and we candle close up above it, we need continuation tomorrow. Tomorrow's candle close is going to be very important as well, because if we do get one of these dojis or a hammer candle, something along those lines, you always want confirmation with that. You would look for the next move to the upside. Because, guys, that's just how these things work. You always need to wait for confirmation. Even sometimes in this space, I'll wait for confirmation on something even like a bullish engulfing candle, which in traditional markets, that's when you can typically jump in once you see that bullish engulfing candle, because that's the supply and demand shift changing. But in the cryptocurrency space, things can just get so overextended to both the upside and the downside, and it is a different beast. It's a different monster, and you have to be aware of that. So we're really waiting to see if we can get a nice strong bounce off there. Then we'll look at our MACD. In MACD, you can see the histograms to the negative. We had our negative cross right up here. It happened with all these wicks and dojis up there, so that would have been the time to take some profit and then wait to catch it on the rebound here. You can see how we broke down through that alarm that I had first at 10,052, and then we were looking down around that 50 moving average, which I wanted to see us hold, but we broke down through on a long day candle, so we have to be careful of that. And then if we go into trading view here, I want to just show you what we're reading. Get this here. And let me know what you guys are doing down low. Have you guys still been sitting in a position? Are you looking to buy at these levels? I mean, what's your deal? And I just want to know what you guys are doing down low. I'd love to hear it. So on the 1 day, we have a 16 sell, we have a 7 neutral, we have a 5 buy. Oscillators, 3 sell, 6 neutral, 2 buy, and then moving average, you can see 13 sell, 1 neutral, 3 buy. So things are starting to change here. This is really one of our last lines of defense, and we'd start looking down around that 0.618 Fibonacci level. But that's how quick this game changes, guys. Up here, everyone's getting all excited and everything, but we needed that cool off. We needed that retracement. Just like back here in some of these moves, we'd pump really hard, then you need a retracement. You pump really hard and need a retracement. And that just is the name of the game. That's how this game works. If we look at this one right here, take a look at this. And this is just to give you examples so you can see. So if we get our price range tool out, and we go from the top of this move where we had a bearish engulfing candle here all the way to the bottom, you're looking at a 41% retracement. And now let's take a look at where we're at here in terms of retracement, just to give you an example. So we're down here around 20%, 19%. So that's what I'm saying. Things can just get really overextended, and that's where people tend to freak out. But the main thing I can tell you is just keep a calm head, and let's wait for this candle close today. I wouldn't go jumping in buying something right now just because we're sitting on that 200-day. I want to see how we close, and the close for me today is going to be at 7 p.m. Eastern time. So the main thing I can tell you is just keep your cool, keep your calm. Let's see if we get a bounce off here. Let's see if the bulls step in. We need more volume, but this is definitely an area that I would want to see us defend, or otherwise we could start dropping back down lower to some of these levels down in here, maybe around 8,100. We'd start looking down around 7,705. But this is the importance of swing trading this market and taking your profit, in my opinion. So let me know down low, guys. I appreciate you being here with me today. God bless you all. Take care.